Hello friends, this is Oral David here and welcome to another video from Adventure Terrain Ventures. In the last couple of videos, we discussed about various trading styles. We discussed about day trading, we discussed about swing trading, and today we're going to talk about positional trading. So what is positional trading? So when we talk about positional trading, we're talking about positions which we're going to hold for a couple of months, a little longer period of time, as against our intraday, which is the same day, and swing trading, which is a couple of days and goes up to a weeks. But positional trading would be holding a position over a couple of months. How would it be different from investing? So many a times investing and position trading can be done interchangeably. However, one major distinction would be that investing in an asset like stocks or bonds or equity or is basically only long positions. Whereas when you're talking about position trading, you do both long and short positions. So you need to use the right asset class to be able to do positional trading. So what are the asset class that help you to do positional trading? So if you're going to do equities, you'll be able to take only long positions because you cannot hold short positions in equity more than a day. If you're planning to do futures or options, they are really good instruments for doing position tradings. So if you're really serious about getting into positional trading, you need to be learning about futures and options. How about other asset classes like commodities and currencies? Now all these other classes, you can do position trading in these, because in India, commodities we have futures, and currencies also we have futures. So basically any asset class, almost every asset class gives you an opportunity to do positional trading. Now what does positional trading really involve? So positional trading would really involve you to not only just look at the technicals, the price charts, but some people also look at fundamentals to see whether the company's fundamentals are good, because they need to be able to weather a lot of different storms. So definitely it's not a bad idea to look at fundamentals also before we could initiate a positional trade. A positional trade would definitely have a higher risk, okay, because positional traders would normally look at higher time frame charts, like daily. They would start with daily charts, weekly charts, and monthly charts. So usually the zones or the demand and supply zones would be much wider, and therefore the stop losses would be further away, and as such you would have to take a little higher risk, and therefore since you're taking a higher risk, you can also expect to get a higher return. So this is very common in the case of positional trading. So if you are planning to get into positional trading, remember that you need to have a lot of patience, to wait for the trade to really play out. In between, definitely there would be times when the market may move unfavorably against your direction, and your conviction should be that strong to hold your position even when the market is moving in an unfavorable direction. Another point to be borne in mind while you are doing positional trading is you need to bear in mind that the risks are going to be higher, and since the risks are going to be higher, the returns are also going to be better. You would also need a larger capital to be able to take positional trades, because the risk per trade would be higher. So automatically your capital should be higher, or else you could end up in drawing down your capital considerably when market moves unfavorably against you, or when situations when you kept getting stopped out or drawdowns. So if you ask me my suggestion, learn trading initially by doing day trading, because that's where you have the least amount of risk. And if you lose, you would lose a lesser amount. But never remain as a day trader. Graduate to a swing trader. because that's where you're going to get a higher return, and it would be less stressful for you as a swing trader to stay looking at the market. And after you are profitable as a swing trader, that's when you should move to position trading, because positional trading is the ultimate, that a trader's lifestyle would be the best. You could really take a position and then stay out of the market for days together by just having a stop loss in the system. And you could be on a vacation, you could be taking care of so many other things, you could be really enjoying life while your position is making money for you in the market. So it ultimately gives you a great lifestyle as a full-time trader. So that's all about positional trading, and I would wish you all the best in learning how to trade and then finally graduate to a positional trader. Yet another type of or a style of trading is scalp trading. Now, this is something which I wouldn't want to spend a lot of time talking about, but it's something that I'm sure you should be either curious or you should be at least aware of what is scalp trading. Now, again, scalp trading is definitely not for beginners. It is for highly experienced traders. Now, scalp traders are those who have many trades in a day. They do a very high frequency trading where they are only looking to scalp out small profits from the market on a daily basis. So definitely scalp trading is day trading itself, but it's done with a much higher frequency. A normal day trader would do say about 2 to 4 intraday trades in a day, but a scalp trader would do in a day maybe about more than 10, 15 or 20 trades in a day, just trying to scalp out small portions of profit. So if you are looking at doing this scalp trading, make sure you have a very low brokerage plan, because unless your brokerage plan is very low, you're not going to be able to really make any profit, because all the profit that you make would go off in the form of brokerage and taxes. However, there are very few scalp traders these days, and most of these have moved over to algorithmic trading or automated trading, where computer programs they decide when to buy and sell based on an algorithm, and they are capable of doing high frequency trading, and it's like more efficient than actually humans having to buy and sell. Computer programs are nowadays buying and selling stocks, and it all depends on how well you design your program. And so algorithmic trading has now become the new style of doing scalp trading. So let's now have a look at a trade which I did this week. We can call this a positional trade because the trade is on a daily chart. This is the price chart of NTPC. Now here we can put together a couple of concepts which we discussed in the last few videos. One concept being that of a pro gap, a professional gap. So as you can see here, we have a period of pause followed by a drop down. So this is actually an area where there is generally where you can see a lot of selling or supply. So when price rushed up into this area of supply, you see that there is a sharp decline, not just a sharp decline, but there is a gap down. So what is a gap? As we discussed, is the difference between the opening price of a day and the closing price of the previous day. So you see market moving up and a gap in the opposite direction of the prior move. And that too in an area where the chart clearly shows that supply exceeds demand. So since we have a gap down, this is nothing but a professional gap or a pro gap. So usually I like to trade these. Whenever I see these pro gaps, I like to trade them. So I trade normally the fill of the gap. So the fill of the gap is the close of the previous day, which is at 159.65. I just get my entry 5 paisa below that. My stop loss usually goes above the high of the previous day's candle or above the wick. So that was at 160.90. So I had a pretty small risk, keeping in mind this being a trade which I found on a daily chart. So since I saw a big move in price in the opposite direction of the previous move, I decided to take this trade. So when actually prices moved this week, as you can see, we had a very sharp rise in price, and prices just touched it. In fact, it made the high of the day. Let me show you the high of the day here. The high of the day is 159.60, which is my entry price. So virtually I sold the exact high of the day right here. So we went short. Now the very same day, prices actually came down, and I already got my 1:1, so I trailed my stop loss to the entry price. So it was a no risk trade for me. I held on the position for the next day. Next day, the market was, range bound. It did not actually go up and stop me out, nor did it come and achieve. It came very close to my target, but my target wasn't achieved. But the very next day, again, we had a gap down, and, the market really tanked. I was out right here itself with a good profit. But if I had held on, I could have even made a much bigger profit. So this clearly shows how important or how powerful is this concept of supply and in combination with a pro or a professional gap. So to see this in more clarity, we can even go down to maybe a lower time frame to see exactly how this trade had panned out. So let me just move to a 15-minute time frame. So this is where I got my entry. So if you can see, market really went up very quickly and gave me the fill right here. It just gave a touch to my high within a second, and then we tanked nearly, more than a rupee just in the very next candle. And that's where I trailed my stop to the entry price. Of course, after that, we had a lot of movement up and down, and, and then next day we had a gap down and then a real sharp fall. So this is one of the positional trade which I had taken, which just lasted for 3 days. So does it necessarily have to last for a couple of months? Not really. It's planned or with that intention of holding. But sometimes, markets are so fast, they give you your target even within a couple of days, though they are positional trades. So let me now show you another trade which I took this week. So this is another trade which I took this week. This is in Bank India. This is a on a 15-minute chart, so it's more or less it is an intraday trade. Now what you can see here, let me just zoom into this area here. This drop, a period of pause and a sharp drop, is an area of supply. So I just marked this area of supply here and place my entry price just below my supply and the stop loss just above the supply. So I had to wait for a couple of days for this trade to really work out. So after I had planned this trade, 1, 2, 3, 4, 5, 6, 7, 8, on the 9th trading day is when I got a fill into this trade. Not even the 9th, the 10th trading day. That's where I got the fill into this trade. So as you can see right here, so this is where I got the fill into the trade. So prices just entered my area of supply and then came crashing down. So I got my target within just 30 minutes right here. Of course, after that, the price came a little bit down and later on went up and violated my area of supply, and now price has gone much higher. So if you can observe one thing, both these trades were done when the markets were really strong and moving upwards. So many times you would hear people say never go short in a bullish market. But what I had done is exactly that. I had gone short. I had not done any long trades. I had only taken short trades in this bullish market, and I was profitable in both the short trades in the bullish market. So never go along with such kind of generalizations or having any such kind of biases. Just that when you see an area of supply, and as long as it's a quality level and the probability of the zone is high, so we in the course that we talk about here, the stock market model street, we have some parameters where we decide on how to decide whether this zone is a quality zone or not. We measure the quality in terms of certain scoring, and we also check how is the probability of this zone really working out. So even the probability is quantified, and then based on the score we decide whether to take the trade or not. So of course this video will not have time to get into how we do the scoring, but we will definitely get into that in great detail in our course. So let us now continue on our discussion where we left last week on the Nifty, the overall broader market, as to what we can expect from it. So as you can see, now we are making almost new historic highs, right? And we had this supply zone marked last week, where I had mentioned that we have traded very deep into the zone, and there's a very high possibility that this zone would get violated, and that's exactly what happened this week. So we had this supply zone violated. The supply has been taken off, right? So let's remove this supply zone right now. We don't have the supply zone anymore. So what we have here is prices moving up, but we don't have any good demand over here except over here. So in case prices start falling, there's nothing to stop it from falling till here, right? So I wouldn't really want to take even long positions in Nifty right now, nor I would want to take short positions. The reason I wouldn't want to go short is because there is no area of supply in the market. Even if I go to a weekly chart or if I go to a monthly chart, since we are at historic highs, we don't have any supply. So I wouldn't want to take a chance by going short at, because markets definitely are bound to come down, but will it come down right from here? Will it go up another 200, 300, 400, 500 points and then come down? Nobody knows that. So I wouldn't want to take a chance by taking short positions, though market is overbought and all those things, right? I wouldn't want to take that chance of going short. Nor would I want to go long because there is no good area of demand right till here. So the only place I will consider to take long positions is right here, or if I see any new areas of demand being formed. So it's a no trade zone for me in Nifty, but I get a lot of opportunities in stocks. So if I don't trade the Nifty, I am trading equities and stocks, and I get a lot of opportunities trading these markets. So friends, it was really nice talking to all of you. Hope all your trading goes well this week. And till we meet again next week, see you. For more information on our course, you can visit our website, that is adventureterrainventures.co.in.